Hey, think we're live and alive. It's July 26th. That camera looks good. Alright, so we got the day after Google and Microsoft reported earnings. Let's take a look at how they are doing. So I am up on my long euro dollar trade from yesterday. Oh, so Microsoft down in the pre-market about 12 bucks. Google up about $6 in the pre-market. I think that's where they pretty much ended up at the end of yesterday. But, you know. All right, let me check. Let me check to see how I look. Fucking hair's looking flat. Got those flyaway hairs. There we go. I need to start moisturizing. I'm looking wrinkly. Alright, so what I am doing on the other screen is coming up with some quick options market information. So to do that, do I want to show you guys any of this? How do I want to show it? So I'm getting the implied volatility and the historical or realized volatility. I'm getting that from Thinkorswim. So that'll tell me if options in general are expensive or cheap. So at the moment, options in Netflix and Tesla look a little cheap, but options are pretty expensive in Apple, Disney, Meta, S&P 500, kinda. And then maybe Amazon, if I didn't already say that. So that is kind of the general options pricing. Now what I'm going to do is I'm going to actually look. Let me pop this out. I will do this on screen. Alright, let me see how that looks. Okay, pretty good, I guess. So, I don't really know if this is the way to do it, but this is the only thing that I can think of. But what I want is I want to get this implied vol on the at-the-money calls and the at-the-money puts. So, you know, like this should be calculated with the last. I mean, yeah, like this is changing over here. This data should be updated pretty frequently, I would think, especially the closer we get to market open. And while the market's open, it should be really like spot on, at least, you know, per as accurate as Thinkorswim is going to allow a retail trader to have access to. But that, like, the way that number's calculated should be publicly available. So, you know, there's like some repeatability with using it, I think. Assuming it's even the right number. But I'm going to assume it is. And yeah, so I'm looking at 30 days because if I'm not mistaken, implied vol looks 30 days into the future. Or the VIX is 30 days into the future for the S&P 500, something like that. So, you know, if I find something different, I'll switch. But, I mean, you know, this is like one of the... It's not really like a strategy per se, because like I'm going to double verify my information with someone else. Like a different type of calculation to get a similar outcome. But yeah, so we're gonna take a look at the money call. So it's got 22.74 IV. Put has a little more. AMD puts pretty expensive, or calls are expensive. How's Kathy Wood doing? Down a little bit in the pre-market. So I haven't checked yet, but each of these names that I'm going through, I'm going to post it on Twitter, or whatever the fuck it's called these days. I'm going to post it. I forget where I was going with that. Right, I was going to check to see which of these names, it's like EWZ is Brazil. It's bullish, but I haven't checked today to verify that it's bullish. I don't think it's changed overnight, and it's probably still bullish. But I have not checked. At the moment, I just kind of want to be a little quick punching in this 30-day at the money implied vol. Because, yeah, I know the problem with doing this is, like, you get these weird-ass numbers, like, what the fuck is all this? Like, well, there's no data here. This is a huge difference. This is, like, why is this so low? You know, anyone got an answer for that? Why is this in the 60s? And this is in the teens? What in the hell? So I guess Google calls are on the table, but oh, because it's gapped up. This thing's like losing its mind. Okay, that's probably it. So maybe you don't want to use like live data when the market's not open, because like when the market's not open, it's illiquid. So an illiquid market gets mispriced and miscalculated. But I chose all of these tickers because they all have big options markets, and that's what I want, because I want as much I want, like, deep markets and stuff. One, for a data collection reason. What in the hell? Why? Because Microsoft is gapping. It's all fucked up. This is weird. So maybe Netflix will... Maybe I need to do this at night, which might actually be better for me, because I would definitely like to not do this in the mornings. NVIDIA. It changed. It changed on me. I'm gonna give it 5 seconds. Alright, now it changed. Maybe it changes every, like, 5 seconds. What the fuck was that noise? Goddamn. It sounded like someone set something down on the bookshelf next to me. Creepy. Let's wait for these numbers to change. Yeah, I wonder if... I mean, this should update like every second during the market. Maybe. Two more. Oh yeah, so I do have GDX is listed bearish from yesterday, and I do remember checking the sector ETFs last night, and there are no bearish sector ETFs that I follow. I don't really follow the industry ETFs, so like the internet or the like oil field services or like solar and clean energy. I don't really follow the industries, just kind of the sectors. But that's not to say that I won't pick up stocks in those individual industries, but I just don't really follow like the solar industry, even though I probably should, since there's a lot of like beta in that. All right, let's see. Who do we have? Let me throw that entertaining screen on. Okay. Okay, so no on Apple. What else? Who else is green? Green, green. All right, so Google by looks like Google's maybe the only one with cheap calls. May not be right. And XLU looks like you can buy puts in that again. That's probably right. So the other thing is like some of these names are like so illiquid that like the calculation's right because it's just not changing. Like every once in a while you'll get it and it's right. But that's I guess that you have to have like a close spread on stuff for that. Okay, let me. Oh shit! All right, Hedge. I should already be live. Okay, so I have gone back and I've screened for what sectors or which of these tickers I follow, bearish or bullish, and we have our answer. Everything is bullish except for Disney. So Disney is the only short. I am taking a screenshot right now. I don't know if that affects the camera, or I don't know if that affects the broadcast. Okay. Guess it doesn't matter. Who cares? All right. Maybe I can keep my speakers on in the background. I'm listening to copyright claimable stuff. So, yeah, maybe if I just keep back here, got the desktop audio off, mic off. I mean, maybe we're all good. Okay. I'm getting ready to post that. Yeah. According to my data, calls are cheap in GDX and Google. Well, let's see. What's trending? How do I get this shit picked up? Yum yum, so good. UFOs are trending. Inflation. Okay, we'll do some of that. Sean Hannity's trending. Maybe he's dead. It's not. It's not wrong to wish death upon people. Remember that, folks. All right. I have posted mine. I've done it. I have posted it. Ooh, 51st minute. All right. What else? What else can we look at? Okay, so what I see, materials potentially might be able to buy puts on materials today. Does that make any sense? Let me look at. I wouldn't. S&P is not overbought. Nasdaq is not overbought. Euro dollar is not. Like everything's in the middle of the range. I can't see. So, camera's blocking my copper view, but copper is in the middle of the range. Dollar yen might be a little oversold. Let me pull that up. This one. So it is technically bullish, how I like, using my indicators. The last arrow we have is green. It's clearly in an uptrend from the start of the year. Let's see, how does it look on my trading, my proprietary trading view? I'll buy a little dollar yen. Cool, I'm up a little bit on my euro dollar long, which I knew. Now I'm going to get long dollar yen. Surprisingly, this takes a lot of margin. All right, I just bought a little bit of dollar yen. Let me go ahead and put that on the chart. Boom. Okay, so that's where I'm long. for now. Tiny position. I will absolutely look to get bigger in that and my euro dollar position. Kind of a good opposite trade there. I mean, not totally opposite, but you know, I'm shorting the dollar on one hand and longing it on the other. But if that's what it calls for, then literally, who am I to argue? Okay, I'm gonna make sure everything is ready for the open. Yeah, so yesterday's performance was decent. There were times I was up like 32 basis points, which is pretty much my goal, is to be right around 30 basis points every day. Because if you can compound that, I think it's more than it's close to a double, if not more than a double of your account in a year. Yeah, that's a big ask, especially in a non-options account. But, you know, it's totally doable. Literally totally doable. Because, yeah, I mean, there's stories of people doing it all over the place. It's just people don't really do it when they run big amounts of money, especially, like, publicly. But... Oh, it's a kata. Hello. Yes, don't worry about me. You take your time. Dude, just covering me in white hair. Guess I need a haircut. It's getting pretty long in some spots. Hello? Meow. Oh. This is a mistake. I'm going to be covered in hair. I'm going to have hair in my beard. I wouldn't be surprised if my nose starts running soon. I just can't touch my eye, even though I just kind of might have. As long as I don't touch my eye, I'm good. Okay. Let's make sure all of our tickers are locked and loaded, ready to go. Meow. 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 Yeah. She's on the corner of my touchscreen laptop, rubbing her face on it. It wouldn't be the first time she's X'd out of something doing that. Hey, what are you doing? Oh, God. That's how she does it. She'll go across it instead of, like, behind it. Well, she saw the mouse. That mouse. She's chasing it. Oh, she's rubbing her face on the X. Meh. Oh wow, natural gas might be on sale. Here's the chart of natural gas. I guess technically it's bullish. Damn it. Fucking cat. Yeah, it went bullish about a month ago. Yeah, so I'm looking at it on my trading platform. Obviously, looking at it on my trading screen, and if I traded futures, I'd be buying right now. So I would watch UNG today. LOL. Well, I got to still want to hear what I'm listening to, but I can't risk getting claimed by it. Why am I seeing a Mississippi State football fucking tweet? Okay, we got 4 minutes to go. Yeah, I'd be looking to short utilities, but I have determined utilities are bullish. I'd be looking to short staples, but I have determined those are bullish. I'd be looking to short materials, but I've determined that is also bullish. Potentially looking to short Tesla, but good luck. UNG though, got a little bit of implied volatility premium. So that means implied vol, you're paying too much right now. So expect it to maybe start going down. And when volatility goes down, assets go up, typically. So that's how I'm seeing UNG. Is it's oversold in a bullish trend with an implied volatility premium. So it's a premium because people are paying for implied vol. They're paying more than they should. That's why it's a premium. So that translates to them buying puts, essentially, or getting short somehow. So the trade is to get long because we're at a point of likely mean reversion. So that's the plan. Yeah. Google. Alright. Let's make sure my stream is still live. Let's see if I see that hand wave. Yeah, I see my clock in the corner. About a minute behind. Okay, we got about a minute to go. Okay, getting ready to rumble. Here we go. We got 30 seconds. Let me get everything alphabetized. So at the top we got AAAU. And on this screener, which you can't see, I've got my sell indicator. When it flashes, I will sell. So here we go. ITA AAU. Okay, let's dump it. Ooh, nice. Fuck, that spread sucks. It's okay. Dumped ITA. Let me dump meta. Damn. Gonna lose about 1% on meta. That's cool. Okay, I've dumped meta. AAU. Trim a little bit. Wow, up 2% on physical gold. It's pretty tight. Okay, so ITA is gone. Now meta is gone. XLI is the next one to go. I'm up 11 basis points. S&P is down 11, 14. Got him. Okay, industrials, we are out of that for about a 90 basis point gain. Bank loan. Okay, I think I trimmed some bank loan. Ooh, there we go. I'm up 12 basis points. XAR. That's another defensive. I'm gonna hold at least one of these defensives. So I'm out of ITA. That's like the big ones, I think. And XAR. This is like the smaller. It's like small cap aerospace and defense. Fucking cat's being a weirdo. Oh, clean energy might be bullish. Let's see. Let me run my screener. Yep, plug. Amazon's on sale. Maybe. Oh, damn. Yeah, PBW. I missed it. Big time missed it. Oh well. Alright, we got Amazon. What the hell is this? Yeah, okay. Max Linear. What is that? An IT company from Carlsbad, California. Circuit design. Down 28%. I will not buy that. Snapchat down 20%. I will not buy that. Amazon down a little bit. I will buy that. I will. It's cool. Alright, just bought some Amazon. It's also telling me plug power. Well, like it gapped down, and you are not getting it at the bottom. This is a short for sure. Fundamentally, it's a short, but it is technically bullish. I don't love it. I'm not gonna worry about it. Sometimes I get kind of. I don't like the vibes of trading. Fundamentally garbage companies. Just don't like that vibe, man. Wow, okay, we got a bunch of good shit on sale. Alright, Amazon's on sale. Datadog. Pinterest down again. Zoom. It's almost there. Okay, let me see. How does Amazon look? How do the options look on Amazon? Huge. Oh, fuck yeah. This is probably a good time for calls in Amazon. They report tonight. Lols. Fuck. Okay, so you slightly missed it. Do I have enough money for that? Probably. What other positions do I have? Just some beautiful shit. Let me sell that. Oh yeah, beautiful. And then my other position is Schlumberger. That's cool. What did I want? Amazon. Fuck. May have like missed it by just a little. I think I missed buying calls in Amazon by 5 minutes. Fuck. I did get shares. That's fine. And my long only's up 25 basis points, which is exactly what I want. Oh, Expedia. I can take a little profit. Cool. Oh, hell yeah. Oh, big gap up. Fucking a little slow on that too, though. Expedia. Okay. Boom, out of that. Got my Jets trade from yesterday. I'm gonna dump all of it. Dump all of it for a 1.8% gain. Graph tack. Monish Pubri. Trim a little Japan. Beautiful. Damn. Unfortunately, that is a smallest position in BBJP. Damn. I'm not really trading it. I'm not really realizing a huge profit on it. Alright, I want live event. That's what we got. Gonna trim one more of that. That'll leave us with a minimum position. Did that go through? It did. Okay. Cool. That was a good trade. How's Amazon? Yep, I've missed it. Damn it, that sucks. It sucks because that would have been that. I mean, these big companies are the ones you want calls in. All right, what else do we have? Why is that RSI not calculating? You can buy LVMH. That is on sale, but you gotta pay that fucking ADR fee, I think. Yeah, it's fucking over the counter. Garbage. Ooh, McDonald's is on sale. MCD, baby. Okay. Who are my biggest losers? Fucking German EV company. I'm down 3% on it. This one. Lilium. I'm gonna hold it. Darden, welcome to the party. Let's see if I can sell that right now because it is at the top of the day, high of the day. Wow, good. Sometimes the Schwab market orders, you do. Fuck, god damn it! I just deleted a good one that I wanted. Fuck. God damn it! Did it again. Fucking stupid. Fuck. I just deleted 2 names off my watch list because Thinkorswim fucking sucks sometimes. Wonder which ones those were. Guess I'll fucking figure out after I go through a couple rounds of cuts here. Whoa, Bumble. Whoa, 3%. How's Match? Shh, close behind. This has got to be a Google sympathy run. So I'm up. I'm up 2.6% on Bumble on a fucking 50 basis point position. You know. And then on Match. Oh, we're just not there yet. We're not ready to. I'm gonna trim. I don't care. I'm gonna hold on to Bumble and Match a little longer. So I've trimmed my position here, but I'm gonna hold it. Who else? McDonald's. When's McDonald's? Oh, earnings are tomorrow. McDonald's should do well. see what's going on Zitter. Actually, yeah, let's listen. This shit. Hell yeah, I can definitely listen to Spaces and broadcast.
Positions open and you're announcing open roles a lot more. But the scariest thing is in the first 6 months of this year, guess who was the biggest employer and bringing on some 300 plus new employees, close to 400.
DOD. Was it the Department of Defense?
Government.
Oh, it was the government.
$2 trillion deficit. They're still the biggest employer by far. I mean,
These fucking chumps suck so bad. It's like, oh my god, the government.
to the retail industry, financial services,
Fucking chump.
etc. The government by far, with close to 400 new employees in the first half of this year, is the biggest employer in the U.S. Second is the healthcare industry, which, by the way, is also, you could argue, a public service sector, and as a result, ramping up the costs. So, I mean, to me, it's what's the saying? I beg from coal, I steal from, I don't know what the saying is.
Yeah, of course you don't fucking know.
Is taking money from everybody and giving it to the hand that feeds the debt even more. Yeah, it's a business.
That analysis is literally not how the fiscal and monetary systems work.
Government workers are taxed, and put that in quotes, and that there's just kind of this weird kind of trading of tickets back and forth that very very strange. But yeah, I don't do that.
BRB.
July was actually a zero.
Thought I left you guys with the this spaces on.
August, point 4 in September, point
Oh
5 in
well.
October, point 2 in November, and point 1 in December. So if we, right now we're at 3%. If we average month over month 0.2% for the last 5 months of the year, that'll put us at around 2.8% year over year. I don't think that's low enough for the Fed to start cutting rates, so I don't think anyone should be anticipating rate cuts anytime soon. If we average 0.15%, so let's say we get a couple 0.1s, a couple 0.2s, then we're at 2.5% year over year by end of year. Once again, probably still not low enough to have the Fed start cutting rates. So, we're going to be in this, higher for longer period. It seems like the market is able to, to digest it. Like
United Healthcare is on sale. Universal Healthcare, Universal Health Services, Universal Health Services. That's on sale right now. Terrible bid-ask spread. So I'm gonna punch in a limit order, and I'm in at 143.70. So I'm down 4 cents off the bat. That's okay, cause you gotta give them a good deal. And I think I did, and there it goes, going up. Good. So healthcare is an inflation hedge. All right, back to these bozos that don't know how to trade.
this week, because the labor markets have held up well, the economy's held up well, earnings have been pretty good. I think Q1 earnings were definitely better than expected. Now we get into Q2. So, I'm personally a little bit more bearish or cautious in my portfolios, just because we've had such a massive run-up in stock prices, valuations, multiples. I just think there's a lot of companies that have run up too fast, too far, and Q2 earnings are not going to justify that multiple expansion.
Okay. So I can have these spaces turned up a little bit louder. All right, we'll just chill in here.
5% of
Listen to these fucking dumbasses.
your view when you like how I guess what I'm trying to ask is how important is getting a variety of data and also getting non-government related data and real-time data. Do you use Truflation? Is it something you look at?
Oh, for sure. Yeah, I see you guys popping up in my feed every day with
What
your
the hell is that
numbers.
showing that?
It's extremely relevant. I think the more data you can use, the better. And I don't know if I even trust the government and their number. And I think a lot of that government, when they put out these reports, it's based on stale data. And shelter.
So it's
I
showing
know
you
for
my
a fact
fucking
shelter's
shit.
been coming down.
I don't like that.
In my building that recently signed leases, and those leases are, the prices are 10 to 15% cheaper than they were a year ago. And we've all seen what's happened at the.
Yeah, alright, I'm gonna start that over. Well, you might get a better price on Universal Health Services at the current moment. Yeah, I want to make sure this... What the fuck? Why is it showing my shit over there? I guess it's fine if I just stick with regular shit.
coming back to your point, I think a lot of people, sort of have experienced over the
Don't
last
love
few
that
years
it's popping up there.
rise in the cost of living. And as a result, maybe we still see a small growth. The growth is now dropped to 2%. It's still a growth, right? I don't think we're going to see, when will prices come down? Only when people don't travel anymore and we have occupancy rates at 30%. Then maybe you'll see prices come down, layoffs will happen. But that's when we're hitting a big-time recession. And what we're forecasting is that we won't have a recession, or it'll be a soft landing, according to some. Then, prices won't come down, that's for sure.
I mean, it's just wild. Like, never in a million years would I imagine that the FOMC would obviously start raising rates later than they should have, and then raise rates by, 525 basis points over the last 15, 16 months, and yet the stock market would, took a nosedive last year, but, I mean, we're not that far away from all-time highs right now. And
I am up 33 basis points, and the S&P is down 12.
Around 3.6%, and the economy seems to be holding up pretty well, and it's surprising how resilient the economy.
XLV, the healthcare ETF, is now on sale from the long side. Load up, bitches. Good 1 cent spread. Boom. In XLV. Bop, 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 bop. Almost time to take profit in KMLM. Probably a little late. It's another illiquid name. Hate that. Well, I'm at my minimum, and I'm slightly down. I'm down 5 basis points on a 5 basis point trade. Whoa. KMLM just puked. Thanks to that illiquid market. Just lost 60 basis points. That's whack. Pinterest is trying to make a recovery from the last couple days. I own it. A little more than a little bigger than a 1% position. I'm going to trim it. Alright, it's back below a 1% position. I'm now up 37 basis points. There's that German company finally coming around. LILM. Okay, LILM. I'm only down 43 basis points on a 1% position. It's not yet. Just tapped to sell. Let me sell something. Sell 25 basis points. little slow on that. Pinterest, new high a day. Freyer battery, new high a day. I've got some. Up 2.2%. I'm gonna dump it. I'm gonna dump it all. Do I want to fucking do that? Do I want to do that? I will sell 25 basis points. I'm down to a 1% position in Pinterest. Just slightly under 1. Alright, Roku is at a spot where I can take some profit. Okay, all out of Roku. That was pretty good. It's like a 2% gain, I think, on Roku. Baito up a little bit. Alright, how am I positioned? 7 a.m. Biggest position is McDonald's. Second biggest is American Express, which is up 50 basis points today. SDP, my utility short. I might want to get rid of that. It's pretty illiquid, but it's like oversold. Kinda. Trying to think though, like, so SDP is a utility inverse ETF. So I'm wondering if like these bullish or bearish trends even matter, since they should respond to something else. Or like this ticker SDP, you know, it responds in reaction to something else. Someone's acting up outside. Okay, so Sunrun. Just talking about solar. Here's one that is technically bullish. And it's like pulled back. I see it as having significantly pulled back on my other screen. I'm gonna buy 50 basis points of Sunrun. CoStar Group, down 10% real estate. So I work in a kind of real estate tangential market, real estate tangential industry, and we just had to lay off 2 people. And we're not a big company, so that's kind of nuts. So SDP. Well, utilities are technically bullish, but they're at the top end of the range. So I can probably hold SDP without too much of the inverse ETF fucking decay that we have to worry about. I also think it's these longer term signals. This is your 3-year tail trend. This would be your 3-month trend. And then the blue would be your 3-week trade. And these are volatility bands. Just Bollinger Bands. Those lower ends are sloping upwards since the beginning. Damn. Since the beginning of the year, these lower volatility bands have been sloping upwards. So that could mean that we're going to put in a bottom here, which would mean that XLU well, I don't know. Who knows? Who knows? Who the hell knows? It's just I'm not down big enough on it to sell it yet. And I don't hate holding it. Let's put it that way. I need some sort of short. And I guess that'll work. Alright. Back to the fucking, people that need a narrative for everything.
If they should really do something super aggressive to contain the inflation, or make it slow and easy for people to kind of feel the impact a little bit and just ease out a little bit on that.
Yeah, if you scroll down, Yosef was referring to a little poll we did on X yesterday, and we got about 1,400 votes, give or take, and the consensus is 77.5%. Obviously this is expected, but in true trueflation fashion, we have to be the the contrarian. 22 point something percent, whatever the math works out to be, 0.5%. We're saying that he will not raise rates, or the FOMC will not suggest a rate raise. So that's super interesting, and the impact of that. I can't even imagine if anybody wants to speak to that. Before we do have a listener question here. Is Husker X, you're up. You got a nice panel.
Lamb West, and I'm looking at these earnings and
Head of data,
They beat.
Head analyst, head of product.
All they do is beat estimations.
Blockchain Association, and of course, Jonah Lupton.
I did buy this yesterday, and I'm down.
Husker X, go ahead.
Yeah, I just wanted to ask you a question about, you guys talking about the
Down.
government being
I'm down 4% on Lamb Weston.
the U.S. and
Oh, we're gonna talk about the fucking federal government with a bunch of dumbasses on Twitter Spaces.
Along with, I think Social Security is trending at maybe like a 4 or 5% increase. I mean, with those two factors, I've read that the GDP actually includes government salaries, and I'm just wondering if, the impact that an increase like that has on GDP and inflation numbers, because historically, I look back the last time we had these kind of dynamics, would maybe be like the 70s or 80s, sometime around then. So I guess my thoughts are like you could artificially increase GDP and which would feed inflation, and you could potentially not ever really have a recession because the government is stimulating itself.
Yeah, that's a really good point. That's sort of implicit. Anybody can take that one. Is the government boosting the numbers by people, fill holes?
Well, let me try and answer this one, because my point is basically that the focus in future months will be more.
These guys are literally like, let's take money away from people. Where can we take money away from people? Fucking out of touch. Absolutely out of touch. Twitter is a rat hole. Fucking rat hole, dude. They're like, oh, aren't we spending too much? It's like, dude, that is a solid fucking P-Rod right there. Ping! India. Oh, ripping right as we're looking at it. I've got some. Shit. No, don't close position. Sort. I'm up 1.3% on my Amazon position from this morning. I missed. That's just the stock. If I had had calls like I wanted, whew, that would have been tight. But instead, I'm gonna fucking sit here and ponder: do I sell my last remaining, my minimum position of INDA, the India ETF? I see we've still got room to run to the upside, but I also see this is probably the high of the day. Around there. Yeah. It could go. Well, it's about to signal. Okay. It's literally about to tell me that to close out. So I'm gonna do that while I'm watching it. Okay, all out of INDA. Now we're gonna wait on Japan. I've already closed out of the stupid JP Morgan beta builders. This is kind of funny. Well, sun is trying to come out. Yeah, I love when the long-term trend on stocks is fucking negative. Let's see what our boy. Okay. It's up. It's up to 74. If that thing sells off a little more, I might buy it. Yeah, I got burned on it. I got fucking burned on it last week. On Tesla, of course. Well, I had it right. I had it right in my long only because I was shorting it via TSLQ, Tesla Q, TSLQ. And yeah, I closed. Unfortunately, it was only a 50 basis point position, but I did close it for a 7% gain. And then I immediately went long the stock because I, lost my mind. And then it like kept fucking falling, and it fell for like the next 2 or 3 days. I'm going to take a little more Pinterest off the table. Very nice. I need a better screen to broadcast, but I don't want to give away the keys to the castle. Fubo ripping. Love that, dude. Dude, 2020, fucking awesome. Lamb Weston, not terrible. I'm only down 3.6%. I mean, in my mind, any food Oh, they do fucking potatoes? Well, fuck. I thought they did chicken. Okay. Well, Lamb Weston does potatoes. And I'm a potato for not knowing that. Play us a song, you're the potato man. Alright, what are these dum-dums talking about now?
I think we're gonna mean, that'll get us under 4% for core, but probably not under 3.5%. So I just don't know what the Fed's going to do. I mean, are they going to hike 25 basis points today and then pause and just stay at whatever that is, 525 or 550, or are they just going to keep going until core is under 3%, closer to 2%? I mean, that could be sometime next year.
Yeah, we're definitely. Go ahead, Oliver.
No comment. I mean, I the only comment I'd say is I tend to agree with everybody's comment. Where I'd love
No
to
comment.
not increase interest rates this month. And that's something
Please
they
don't
might do
increase
something,
rates.
but, the only rational thinking I can come up with they want to do that is with the labour market's too hot, right? And that's fueling spending, demand, everything else. But I think there's so many other factors, and in the economic environment that we are today, it's changed so much in the last 36 months that I don't think the traditional metrics of what we've used to measure the economy is probably the same metric we should be using going forward, because so much more. The supply chain disruptions we've had because of Ukraine war, COVID, the quantitative easing we had just before during the COVID years, all these factors are changing the way the economy is working and what's left of the supply chain system. That I think I'd love for them not to increase interest rates. But I believe.
I mean, I don't know if
all the voting members.
I don't know. I don't know about that.
The question really is going to be what is the wording that Jerome Powell is going to be using? Because I agree with you that the Fed and Jerome Powell is specifically concerned around this is he doesn't want to be seen as flip-flopping, and how do they react to that 25 basis points? What's the wording he's going to be using in this one to dictate whether this is the last increase? And I think this should be the last one. I think at every data point they should be increasing here already. But if they do, this has to be the last one they do.
I just don't understand how they can talk about lag effects and then act like they don't know about lag effects.
Right.
But I would say that's only a minority of the board that believes that, right? That lag effect, right? A lot of others don't believe that lag effect is what Boston believes, which is 12 to 18 months, right? And he's of the viewpoint that they need to curb it now, whereas others are, suddenly, I can't remember if it was yourself or someone else who mentioned it, who suddenly mentioned, oh yeah, but core inflation is still at 4%, 4.8%, we need to cool that down. Forget about the top headline number, let's now look at core inflation. So, it's very mixed messages are coming out individually from, and this is what my whole point was, I think the voting members, the 11 voting members of the Fed are increasingly having a diverging viewpoint of what's been happening, which is putting the Fed in a very difficult position, and Jerome Powell in particular, because in the last 12 months they've had a very uniform and consistent messaging across all the voting members, and we don't have that pattern anymore. So I think they're entering a tough time at the moment.
And before they go on vacation to Kitty Buckport or Martha's Vineyard, I mean, they just want to relax for the next month. Could you imagine if he doesn't mic drop and doesn't raise or doesn't meet expectations? My goodness, that'll just blow everything up. But very, very interesting discussion. We shouldn't let you go, Jonah, here for too long without asking for maybe what you're looking at in terms of stocks. Obviously, it's not financial advice. All the usual disclaimers there. But you're a trader. You're in there. You're day-to-day mixing it up. What do you like out there?
What do you like, Jonah? Tell us.
So I don't trade mega cap tech. I'm mostly growth stocks. I'll trade some large caps, mostly mid caps. Like that's kind of my sweet spot. So like I mentioned early, Celsius is my largest holding. Still one of my favorite picks right now, even going into Q2 earnings, even after the big run the stock has had. Because we just got the recent Nielsen data, it shows that they're growing in the U.S. retail sales 160% year over year. Now that doesn't include Amazon, that doesn't include Costco, that doesn't include international. So when they report Q2 earnings,
and this is an energy drink, right?
Yep. The blended year-over-year growth rate on revenues will be less than 160%, but I think it'll probably be around 105. It was 95% for Q1, and the stock gapped up. if no one's familiar with the company, it's an energy drink company, the third largest energy drink company now in the U.S. behind Red Bull and Monster. I don't think a lot of people realize that energy drinks is an $80 billion global market. Celsius has like just a tiny sliver of that globally. I think they're now up to about 6.5% in the U.S. But energy drink market is growing about 9% a year. Actually, right now it's growing faster than that. It's growing double digits because of price increases. But I think if you look out over the next 5 to 10 years, it should grow about 8 to 9% year over year, which means it'll double in 8 to 9 years. So 8, 9 years from now, it's probably a $160 billion market, if not bigger. I think Celsius has 4, 5, 6% global market share at that point. So I do think Celsius has a chance to be the next Monster. Monster is a $60 billion company right now. They'll do about $8 billion in revenue over the next 12 months. I think Celsius could get there over the next 6, 8, 9 years. So even though it's up 10x over the last 3 years, I think it has enough, a chance to 5x from here on the back of that Pepsi distribution deal. So Monster has been public for over 20 years. They've only had 1 year where they grew faster than 50%. Celsius is about
Yeah. All right.
a year, and then other stocks.
Let's see. I took my video off. Okay, good. Still off. Good. Beautiful, beautiful.
West, and the reason I'm staying bullish is just because of the airline report. Travel, like we talked about before, travel remains and Uber makes
So I am probably,
traveling to a city. How do you get around the city? How do you get to meetings?
I don't know, probably won't be talking too much more on this stream.